Welcome everyone to Vested Interest. This is Shane, and this is our weekly portfolio update. We did add $1,553 in new capital to the portfolio. We will go over all of the new purchases and the funds, what stocks those funds went into. We will also cover any dividends received, any options we were in this week, any sales that we are going to make in the portfolio. We cover all that on a weekly basis. I want you to see a real portfolio built out over time so you can see the ups and downs of a portfolio as the market experiences its ups and downs as well. But before we get in the video, I'd like to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging into the portfolio. I do it on a weekly basis. That's why I do these updates on a weekly basis so you can see what I'm doing. It is free to see what I'm doing in my portfolio, but if you would like to help out the channel, if you could do me a big favor, it doesn't cost you a thing. Well, it costs you a couple seconds of your time or a second of your time, but it doesn't cost you any money, and it really does help out the channel. Hit that thumbs up button down below if you find any value in the content. Make sure you subscribe. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Click the notification bell so you're notified whenever I put out any new content. Along with this weekly portfolio update video, I do a stock pick of the day series Monday through Thursday, typically when the market's open. We take a look at a company's stock, run it through my screener, see if it is one that I'm interested in doing more of a deep dive. And there is the thanks button down below for those of you who may want to buy me a cup of tea, cup of coffee down below. Appreciate everyone who can do that. And again, a special thank you to all the subscribers and the viewers of the channel. You guys are awesome. The channel continues to grow because of people like you. And thank you for everyone who's taking the time to do that this morning. Again, click that thumbs up, hit the subscribe button if you haven't already, and click the notification bell. Thank you. Thank you. Now let's jump into it. Options. Yep, we did have a very small options play that we ran on Thursday. Actually, this is on a play that I am thinking of removing from the portfolio. That's part of the reason I was doing it. So it's one I'm wanting to sell anyway, and a way to maybe generate a little bit of more income to do that. So we did a covered call, one contract on BABA, ticker BABA, $89 strike price there. End of the contract was the 24th, so we entered it on Thursday, right before the contract end date on Friday the 24th. We received $10 in options, or 10 cents per share in options premium, which amounts to $9.45. Again, not a lot, not a big options, but this is one I'm thinking about just selling out of the position and rolling it into other positions in the portfolio. I don't have a lot of extra funds right now, but there are some stocks in my portfolio that are really pulled back. I'd like to divvy out of, and I'd like to build up a couple other positions. Right now I'm a little heavy on my position count. I'm over 30 positions. I'd like to get that with 2 ETFs, so really 28, 29 positions. I'd like to get that down to about 20, 28, 25, somewhere in there. BABA is one of the ones that was on my list, partly because they just started paying a dividend last year, and they did not raise that dividend, or at least have not yet raised that dividend. And I don't believe they paid a dividend in January either. So I was a little disappointed. That was kind of the schedule I was wanting to see from them. They were only doing it once or twice a year to begin with, but I want them to at least be consistent with that. So I would rather roll it into some more consistent payers, quarterly payers, and maybe divvy these funds out. You know, I have a little over 100 shares. So I did get this position called away. It was assigned. It did close above the strike price. So it was $89.13, right? So I missed out on like $3 that I could have just sold out of it. I would have got about $3 more if I'd have just sold the 100 shares outright. But that's what happens whenever you run options. You do limit your upside a little bit. So it was the $89 per share that we got, not the $89.13. Now, again, I do have over 100 shares, so if it continues to run up, I'll probably wait a little bit and maybe sell out of those other shares when it reaches over 90 or 92, something like that. But this is one I would like to scatter these funds over the rest of the portfolio. I just added Occidental. I'd like to build that one out significantly more, you know, maybe to a couple hundred shares or 150 shares, somewhere in there, but several other positions I'd like to add to while they pull back. And this gives me a little bit of capital to be able to do that. It also shrinks my overall portfolio size so I can continue to focus on some other positions that I don't have built out. Procter & Gamble is one I'd like to get over 100 shares. Union Pacific, it started to run back up, but if it was to drop back down, I'd like to get that over 100 shares as well. So this is just a way to get some capital to roll across the rest of the portfolio. All right, and now on to the dividends received. We did receive some dividends on the 22nd from Cisco Systems, ticker CSCO. This is out of the information technology sector. We received $90.74 in dividends. We do have the drip set, so any position that pays dividends, the dividends that we get goes right back into that position, buys more shares, and adds to the overall share count and future dividend payments. So this 1.4, this $90.74, again, we have the drip set, went right back in and bought more shares of Cisco, picked up 1.48135 shares. This 1.48135 shares adds an additional $2.37 in passive income over the next calendar year. And this is the dividend snowball. We'd already put funds in and bought shares of Cisco Systems. Those shares paid us dividends. Those dividends bought more shares, and those new shares add additional capital. And I know it's not a lot, but it's every little bit helps, and it adds to that snowball, and it will continue to grow over time. And then the next time we get dividends, it will be on an additional 1.48135 shares plus this $90.74. So it'll be closer to $93 instead of the 90. Well, if the share price doesn't go up a lot, we'll be able to buy a little bit more than the 1.48 shares. If the share price continues to go, maybe we get a little less, but it at least adds additional passive income. We also received dividends from Cisco Corporation on the 24th. They paid us $57.52. This is one of those positions I'd like to build out a little bit more. I think I'm a little over 110 or right around 110 shares. I'd like to get this to 140, 130. It's kind of pulled back right now as well. So that's part of the reason, again, for that selling out of the BABA position. It lowers my overall position count. I can focus on building out some other positions that are relatively small. And then we can continue to grow the portfolio. Ticker SYY is out of the consumer staples sector. Paid us $57.52. The drip is set, so it went right back in and bought 0.77951 shares. I'd like to get this to where it's at least buying one share every time it pays out dividends. So that's part of the focus on shrinking some of the share counts inside the portfolio right now as well. So this 0.77951 shares adds an additional $1.59 in passive income over the next calendar year. Now we get to the new invested capital on January 21st, which was Monday. We tried to run some options on Monday. None of them hit, but that's the way the options have been going so far this year. But we did add $1,104.30 in new capital. And with those funds, we added to our LyondellBasell Industries position, ticker LYB. This is out of the material sector. 6 more shares at $77.89 per share. Kraft Heinz, we added 1 share to KHC. This is out of the consumer staples sector here. Added that 1 share at $29.56. This is another one of those positions I'd like to build out right now while it's well below my cost basis. I think my cost basis is in the $34 to $35 range. Under 30 right now. I want to build this one out, bring my cost basis down, bring up my dividend yield and potential future returns. Occidental, this is our newest position. This is one we've been building out. I want to get this to 100 shares. We're not quite there yet. Ticker OXY is out of the energy sector. We picked up 12 more shares at $50.62. I believe this dropped under $50, and I hope it stays under $50 so I can add some more. Again, I think I'm at right around 70 shares here, but want to get this to at least 100, 150, if not 200 shares here. And this new capital, $1,104.30, the new shares it added to these 3 positions, added an additional $44.32. And the biggest driver of that right there was actually the LyondellBasell Industries position. It is really pulled back. It actually rebounded a little bit, about 5 or 6% this past week, but it was still down in the 70s, well below my cost basis, which is in the mid 80s. And the dividend yield on this one is very high right now. So another one I'd like to build out a little bit while it's pulled back below my cost basis. And we weren't done. We went back into the portfolio on the 23rd. We added an additional $448.81. With those funds, we picked up 2 shares of Vale, ticker VALE. This is a mining company out of the material sector. Picked up those 2 shares at $8.89. Another one that's well below my cost basis. My cost basis is right around $12 per share. So I'd like to build this one out significantly while it's under my cost basis. I think this is about 20 to 25% below my cost basis right now. So I've been nibbling on it almost every week. 1, 2 shares here, 1, 2 shares there. I wouldn't mind dropping, 10, 20 shares into the portfolio on this one while it's down. Haverty Furniture Companies, ticker HVT. This is out of the consumer discretionary sector. Picked up 2 more shares there. Another one that's really pulled back. Picked up those shares at $22.80. And the next 2 are our weekly buys. We buy SCHD, Schwab Strategic Dividend Growth ETF. Buy that every week, 3 shares at least. Sometimes I do 4 or 5. Picked up those 3 shares at $28.07. And the other weekly buyer, we buy this one regardless what the market is. I'd love this to pull back as well. We were getting this down in the 270s. Now it's back up over 298. I think this is the first purchase in the 300 range, but ticker VTI, the Vanguard Total Stock Market ETF, and that's all the stocks inside the overall market. 1 share at $301.24. And again, we're going to add SCHD and VTI every week regardless of the market. The $448.81 new shares it picked up added an additional $11.21. Total invested for the week, $1,553.11. Total passive income added to the portfolio, $59.49. That's the new capital plus the dividends received as well, and the shares that those dividends picked up as well. And here is the overall sector weights. Let's run through this a little bit. Communications makes up 9.59% of the portfolio. This one may come with a big change here if I do sell out of and don't reinvest or run the wheel. If I want to run an options wheel, I may do that. If BABA drops way down on Monday, I may repurchase it and try to continue to run options on it. But if it runs up and goes in the other directions, let's say it opens at 90, 91, 92, I may just keep the funds that I received from that and reallocate it across the portfolio. So this consumer discretionary slice may see some changes here, especially if that happens on Monday or Tuesday. We'll see what the market gives us on Monday or Tuesday, and I'll make that decision. Consumer staples at 8.71% of the portfolio. Energy makes up 7.3%. Financials is the smallest slice here at 2.85%. And part of the reason for this is SCHD is financial heavy, so I don't mind being a little lower on this because SCHD gives me some exposure there that I wouldn't necessarily, that I don't necessarily have in the overall portfolio. Healthcare makes up 12% of the portfolio. Industrials at 7.1%. Technology is the largest slice of the pie. If LRCX there, Lam Research, was to continue to pull back, it went over 80 for a little bit, so I backed off this week. But if it drops below my cost basis, I want to continue building that one out as well. Google has run up over above the 180. I was liking it under 180. It's over 200 now, or right around 200. So I backed off that one a little bit. But again, another one, if it was to drop back down to 180 or lower, I would continue to add there as well. So we'll wait and see what happens with Lam Research and with Google. But those are 2 positions I would like to continue to build out. Materials sits at 8.27. We saw the Valet position and LYB there, Lyondell Basel. Those are 2 positions I'm looking at adding to right now. Utilities, American Waterworks is right around my cost basis. Wouldn't mind nibbling there and adding a few shares as well. REITs and real estate's at 7.76. Realty income still looks slightly below my cost basis. Might be adding a little bit there. And ETFs, again, we're going to be adding to SCHD and VTI every week. And eventually, because of that, this will eventually be the largest slice of the pie. Over here to the right, you can see those portfolio sector weights broken down to match the pie, as well as the dollar amount allocated to each sector as well. And here it is, overall portfolio. And I say this every week, so I may sound like a broken record to some of you who come and view the videos every week, but I like to show this. I want you out there, maybe some of you are just starting your portfolio. It's not going the way you want. Maybe you're seeing some positions in the red. Maybe some of you are on the fence and haven't started investing yet. I want you to be able to see a real portfolio built out over time by an average person like you. I go to work every day. I'm married. I have 2 kids. I am not a financial guru. I did not go to college for investing. My parents do not have a bunch of money and did not get me into investing whenever I was young. Neither one of my parents even graduated high school. So if I can do it, you can do it too. You are going to make mistakes. I make mistakes. I'm not perfect. The greatest investors in the world will tell you they make mistakes. That is the price of being in the market. But don't let that be a deterrent to not investing. Time is your greatest driver of your overall portfolio. Even small amounts now turn into big amounts over 20, 30, 35, 40 years. So the sooner you get started, the better. Again, you will make mistakes along the way. It is the cost of admission. It is the cost of the education, so to speak. So don't be afraid of those mistakes. Hopefully watching channels like this one, you can learn from my mistakes. I do something wrong, you don't want to copy it, right? That's the idea. I want to be able to show you this portfolio built out over time so you can see my mistakes. You can see that you can do it too. Maybe it gives some of you out there some of that confidence that it is something that you can accomplish. You don't necessarily have to pay someone to manage your money. You can do it on your own. And the easy way to do that, if you're uncomfortable with understanding stocks, understanding balance sheets, income statements, maybe it's ETFs and index funds to start, something that tracks the S&P 500. or VTI like I have that tracks the overall market, Vanguard's total stock market, so all the stocks in the market. Or if you want to do something like SCHD where you're dividend growth investing, that would be an easy way to do it. You can set it and forget it. Just chunk money into it every week, every quarter, every month, whatever you're going to do. And don't worry about having to do any kind of research on individual stocks, right? That would be the way to go. Warren Buffett would recommend something that tracks the S&P 500, something like VU, Vanguard's S&P 500, or SPLG is another one. So there's a bunch of them out there. You pick your investing strategy. I recently did a video yesterday on comparing SPLG to SCHD over time. Check that out if you haven't. It is an interesting watch in my opinion. So here are all of the positions in the portfolio in this column. Total shares, and all of these numbers are going to be as of the close of business on Friday. So total shares as of the close of business on Friday. Current price, again, as of the close of business on Friday. Market value, average cost per share. So this is my average cost per share. So even though Ally is currently at $39 per share, my average cost per share is $25.89, right? Purchase price, this does include reinvested dividends. Whether I'm up or down, I'm going to show you the totals here. Percent return up or down. Again, if I'm in the red, that means I'm down. I want to show it out in the open. Not all of your positions are going to be in the green all the time. There are going to be ups and downs in the market. There's going to be ups and downs in each individual stock as well. Every stock has a 52-week low and a 52-week high, and they can retouch those 52-week lows or those 52-week highs at any time, and they can reset new 52-week lows or 52-week highs at any time for any number of reasons. Market sentiment, so just people's opinion, could be around their reporting of their earnings, right? Whenever they report out their quarterly earnings, sometimes they drop or go up based on those earning reports. Future forecasts are downgraded. Sometimes they go up and down because of that. Sometimes it's something outside the company's control, like a war breaks out somewhere, or if you're an energy company, for example, if there's a bad storm off the coast and impacts energy production, they have to shut down some of the offshore wells for a while or something like that. So there's a number of reasons a stock can go up and down. And sometimes a stock's stock price can become disconnected with the overall company. So that's something you want to take into account. And whenever those times happen, whenever it's a good company and you can get it for a cheap price, that's what you're looking for. What sector each position falls in, whether it's a quarterly, monthly, semi-annual payer, current yield, my yield on cost, portfolio weighting here. So what we saw on the previous slide was the sector weightings. This is each individual weighting. I do have a rule in my portfolio. I don't want any one position. So these would be single positions to be more than 10% of the portfolio. And I do not want any one sector to be more than 20 to 25% of the portfolio. Now that is not the same for, like SCHD or VTI. So the ETFs will eventually be probably over 20 to 25% of the portfolio. That's fine. I'm just talking about individual sectors, not the ETFs. Estimated annual income in this column, payout months here, dividend growth year over year. This does change over time. You can see here I've started highlighting again the ones who have raised their dividends for this year's payouts. I will do that as they raise their dividends over the year. And where it sits at 15% of a 52-week low, I think I've beat this to death, so I'm not going to touch on it, but it is where I want a high water mark for this average cost per share to be. I want it to be under where it sits at 15% of a 52-week low. Total shares, 6,528.753 shares. Overall portfolio is worth $329,309.71. I have, including reinvested dividends, $305,425.25 out of my pocket into the portfolio. Total return, I am up $23,884.46 or 7.82%. And I say this every time, this is not what I focus on. It is nice to see that I am up. You recently saw this down. If you've been watching the channel any numbers a week, you saw me down, 4%. So there's been a 11, almost 12% turnaround here in the last couple of weeks. And is the market any stronger or any weaker because of that? And I don't really think so. And this doesn't really matter to me. Why doesn't it matter? Well, unless I sell out of all these positions in the portfolio, I don't lock in this gain, right? Same thing with the ones that are in the red. Unless I sell Valet, I don't lock in a 25% loss. And I don't plan on selling it. So long as I'm holding these positions, I don't really focus on total return and percent return. Again, nice to see that I'm up, but unless I'm selling my positions and selling out of all of them, I'm not locking in this return. Now, if I sell out of BABA, I'll lock in, 18.07% return here. So that would be locking in a return, but I have to sell out of the positions to lock this in. So that's why this isn't my focus. I don't plan on selling out of my overall portfolio. Current yield is 3.823%. My yield on cost is 4.122%. And this is what I focus on. The reason it is circled in red over here, the dividends paid from all the positions in the portfolio. And this continues to go up as I add new capital, as the positions in the portfolio raise their dividends, as they pay out dividends, and those dividends get reinvested to buy more shares of that company. And it currently sits at $12,588.59, and again continues to grow whether the market's up, whether the market's down, whether the market's floating sideways. And if I do sell out of BABA and reinvest it, it will probably impact this significantly, hopefully in the positive direction. Like I said, I'd like to build out Oxy. I'm at 70 shares. I'd like to get this to at least over 100 shares, if not 150 to 200 shares. I wouldn't mind adding a little bit to AWK. It's just within 1% of my cost basis here. Wouldn't mind adding to it while it's right there. Comcast, wouldn't mind building this one out some more. CVS, I'd like to build that one out some more. Google, again, it's at $200.17. If it was to drop back under 180, I'd like to build that to over 100 shares. HVT's down. I'd like to add to that. Johnson & Johnson's still down. I wouldn't mind nibbling on that a little bit, even though it's my largest position. I wouldn't mind driving that to $120,000 invested. Kraft Heinz, you saw I added some there this week. I'd like to build that out, 5.46%. So it's not raising its dividend, but I can raise the dividend and my yield on cost by adding to it while it's below my cost basis. LRCX, it's up 3.16%, but again, under 80 again, so pretty close. If it gets back to my cost basis, or even at 79, I might nibble on that one a little bit. Wouldn't mind running that to about 12, 13,000 invested. LYB, I'd like to add to this one while it's below my cost basis. NextEra Energy, it is pulled back right now, but I'm up 32%, so I don't know that I'll be adding there. Nutrien is still real close. Probably wait for it to pull back under my cost basis, but wouldn't mind adding a little bit there still. Realty Income, definitely one on my add list. Occidental, we just talked about. I'd like to continue to build that one out. Pfizer, it's still down. I'd like to build that one out as well. Procter & Gamble, while it's in the 160s, under 163, I want it to drop just a little bit, but if it drops below 163, I want to add some there. SYY, we talked about. I'd like to build this one out to where it's at least purchasing one share whenever it pays out dividends. SCHD is part of our weekly buy, so is VTI. Valet is below my cost basis like they had there. Verizon, I wouldn't mind adding a couple shares to this one while it's under my cost basis again. And Union Pacific, you can see here 248. This one we were adding to at the beginning of the month when it was down in the 230 range. It's run up a little bit, so I'd probably wait to add there, but I would like to get this to 100 shares as well. So there are several positions in the portfolio, maybe getting rid of the BABA position overall. Again, I do have the 8,900 right now that I can either run the wheel on this, keep the capital and reinvest it across the portfolio. That will help lower my share count overall. And then I can focus on these positions. It is starting to get a little big. It is harder for me to keep track of all the positions in the portfolio. Around 30 is all I can manage and feel like I'm, up to date on where the company is. So eliminating one or two of these might be my strategy going forward. BABA being the one on the chopping block here. Again, it was supposed to pay out on January and July. I don't believe they paid a dividend in January, which I did not like that. So I was hoping for them to maintain that. So I wouldn't mind building out some of these other positions and foregoing this one and locking in that gain right now. All right, that is my portfolio update. Let me know what you think in the comment section down below. And as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I am always interested to read your questions, opinions, or suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, drop that in the comment section. I'll try to work it in on a day that it's pulled back. And another reason for you to hit that notification bell and hit that subscribe button so you can come back and join us for that video. Now, this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I am only sharing my opinion. Investing journey for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.